Traders, welcome back to the YouTube video, and in today's video we're going to go through how to navigate the chart using price action. We're going to go through how to find key levels, how to find trend lines, and how to find high probability setups because I have marked them all over the chart, and we're going to go through how to find them as the market is unfolding. Now, high probability setup is a tool like a pullback at the proper key entry point, which would be trend line, exponential moving average, this 21 bar EMA, the blue line, or support resistance line. Okay, this is going to be a high probability setup if it's at the proper key entry point and with the direction of a trend. Now, today started with the bearish looking structure, and right off the get-go, all you have is this shortened trend line. Now, there's a hint. If you guys take a look at the upper swing right here, there's a geometrical formation which you can use to draw the trend line, and market is turning down here and turning down here. So there's a possibility right now to drawing the trend line like this. But you don't want to be hasty. You want to follow the trend line rules. So you have a break and new extreme form right here. And after price creates a break and forms a new extreme, you expect correction or straight up reversal. But during correction, the trend may resume if it's really strong. So how do I know from this point on, if I have a break and a new low, what is the best way? How do I handle the price action? Well, the best way is just to wait. If I see a strong push above EMA, I'm deleting this and I'm switching to reversal mode. If I see EMA holding price, I'm going to keep this trend line on the chart. So just because you have a break and a new low, that doesn't mean you're going to instantly start reverse. You just sit, wait patiently, and we wait how EMA reacts, and you have a new low, first entry short, pull back, second entry short, and EMA is pushing lower and pushing lower. Now, this is the high probability setup. This is a two-legged pullback we talked about at the key entry point, but this is not a good high probability setup because the bar is really big. Your stop loss has to go above this bar, and you're going short directly into the low of the entire day. So at this point on, once market is pushing lower, you have to draw this trend line because you move way too far down after a new low, and you keep pushing. So this is a good sign. This is a weak market, is a strong downtrend. All right, and take a look. You're pushing lower. So this is the instance where you're going to draw this wider pattern, and you can delete this pattern. You don't need it because you're playing the downtrend now. So the new channel has been established, and you follow this rule. So the trend is down, and the only thing you look for is a second entry short or failed second entry long. Okay, there's the new low, there's the first entry short, pull back, second entry short. But take a look at how you're far away from EMA. This is not high probability setup, and you have a shortened trend line. And take a look, I'm drawing these trend lines like this. I'm drawing this trend line tight. I'm not drawing it super wide like this because the bigger trend is down, so I need to draw the corrections tight. However, this one is tight enough. Take a look at how nicely it fits price. This is a perfect drawn trend line, and the trend line rules apply even for these short-term corrections in trends. Okay, so take a look. This second entry would have failed, but why? Because there's a trend line in play, so you're not respecting the trend line, and you're not touching the exponential moving average. You're not at the key entry point. You cannot jump the gun too quickly, too early. Okay, be patient. Wait for price come to you. Don't chase the trades. And there's the first nice double trap entry off the exponential moving average. However, the shortened trend line is still being respected a little bit. I didn't like it yet at the time, but when you have a lower high confirmation of key entry points still holding price and confirm the double trap, this is now a decently high probability setup. When I was watching this live, I didn't like it at the time too much because we had 6 bars stacked. But looking back at this, what more you ask? Double trap, lower high, EMA holding price, strong downtrend. Don't overcomplicate things. All right, the market is pushing lower, so the trend line rules are still in effect. Second entry short right here, high probability setup. It is not because it's far away from key entry point. The key entry point is where all the magic happens. Okay, so what you have here now, you have a new low, you have a first entry short. This is an EMA gap bar, so you're expecting for price to push lower, but this is a little bit advanced setup. I'm not going to mark it because this is not a beginner friendly setup. Now you have a new high, and you have a first entry long, pullback, second entry long that is confirming the EMA, and you're expecting a second entry long failure because you're below EMA, and this is a strong downtrend, but it didn't happen. Market pushed higher and gave you this a double top. At this point on, market is about to open, and you still are playing the bigger pattern because the bigger trend is down, so you have a new, you have a break, and you're expecting a new extreme to be formed for the bigger pattern, so you're not thinking even at all about buying. Okay, you have a break, attempt to create a new extreme. So from that point on, we came very close to creating a new extreme, but you guys can see how EMA was pointing down, and now it's being completely flat, and we're swinging up and down, up and down. So this is a trailing range. You have a double top here, you have a double bottom here. So you're switching to range rules. Okay, this is the key level, and this is the key level. So you have a move up, and you have a first entry long pullback, second entry long failure. you push below EMA, this is a good indication that the market is about to be bearish. You're coming from triple top, so it's reasonable for you to expect to go down here. Now, this was my first trade for the day, and I barely scalped out on 10 ticks. And I had my trend line initially something like this. And it even fits really nicely like this, but I think it really should be a little bit wider because we just had a double bottom, so you're expecting a little bit stronger correction. Nevertheless, price pushed higher and they gave you a failed breakout. You guys can see most breakouts of trading ranges will fail. That's rule in price action. So this is in a trading range now and you're playing the range rules. Okay, but we can see that we are struggling to push lower. Now you have a first entry long pullback, second entry long failure. Had this closed above, I don't know actually why this is marked because it didn't close below EMA. Had this closed below EMA, this would have been great reversal pattern coming off failed breakout. You would have closed below EMA. Actually, there was even a lower high prior here, and this lower high would have worked for over 3 points. So this tells you how volatility is large because this small move is over 3 points. So the scalp would have been made. But the fact that this failed second entry long failed and we pushed higher kind of told me a little bit that the downtrend may not be so strong. But you know, this is a decent entry. I will mark it because this is a big bearish bar, lower high. You don't have that much room. Once again, you closed at the very low. But you came from the failed breakout and lower high confirms the failed breakout. So you guys can see how you're struggling to push down to the bottom. You're starting to have a bullish imbalance, all right? So even though the bigger pattern takes precedence, you have to respect what the market is currently giving you, and there's a bullish imbalance, so you need to let this play out. Market push higher, failed breakout, push back below EMA, which confirms the bearish momentum, and this is where I want to see the same pattern right here and the same pattern right here. I want to see the failed second entry long because overall bearish is down and you trade it down into trading range, you're most likely going to break down. So just because I'm respecting the bullish imbalance, that's only I'm respecting. I'm waiting for it to play out so I can safely jump on board to sell. Okay, bigger trend is down. So any second entry to go long below EMA is going to be trapped. The people are going to go long way too late. That's the whole point. Now there's a strong push below EMA which confirmed the bearish momentum, which is perfect. But the second entry long failure, you know, it worked, but it stacked horrible stems. It really 1, 2, 3, 4, 5, 6, 7 bars. It's really not great. I really don't like considering this as a high probability setup. And there is a strong push down. Okay, and here's important thing that happened today, because a few traders took a second entry short right here, but you cannot take this entry. Why? Because from this point of view, you have a break and you have a new extreme formed for this overall downtrend. So according to rules, you have a break and a new low. You expect a correction or straight up reversal. At the same time, you have a failed breakout below this key level. So not only you have a new low, you also have a failed breakout. So you're expecting for price to generate strong momentum. So you have to sit here patiently. And this is why I'm drawing the trend line tight like this. I'm not drawing the trend line tiny like this. I'm not drawing it tight like this. I'm drawing it a little bit wider, excuse me. Because I'm expecting a little bit longer correction since we came from the failed breakout and since it's a new low. If there was no new low made, I'm drawing the short-term trend lines and this would have been great short to take. Now market push lower, you're expecting the same thing because EMA holds price. I'm expecting failed second entry long. Once again, same story like right here, bunch of stems stacked. You're not touching the EMA. Then you have this entry, but so much congestion, so much sideways movement. Most breakouts of these congestions will fail. And there's a little failed breakout, but you don't want to fade it because take a look at the massive downtrend that has been established. And here's once again, after new low, you expect correction or straight up reversal. And just like we talked about right here, the EMA holds price. Same thing is happening right here. EMA holds price here and EMA holds price here. And you guys can see this breakout pullback pattern. This lower high confirmed this kind of like this reversal pattern. EMA holds price. Key entry point is holding price. Beautiful bearish bar, which you want to sell below. You still expect a new low of this downtrend, which was now confirmed because we failed to push above EMA twice. So market push lower. And here is the situation where you start to feel that this is going to be a stronger downtrend, because when you see, when this new low didn't generate reversal, this is starting to feel like this is going to be a strong downtrend. So you have to draw the trend lines, you have a break, new extreme, you're not even thinking about buying. And once again, you're just waiting to see if EMA is going to hold or you're going to have a push below EMA. If EMA is going to push below, you're thinking bearish. If EMA is pushing up, you're not thinking bearish. Okay. You may start to think long only after some uptrend appears, because you cannot just jump on longs early because the overall pattern is still very bearish. Okay, so what is this trend line doing here? Okay, now since we are pushing below exponential moving average, that's the same thing right here. There's the same thing right here. There's the same thing right here. With uptrend played out with the break and a new low. The push below EMA shows you strong bearish momentum, and looking for same thing. First entry long, second entry long, failure. But this is a bad signal bar. This was really tempting. This would be a high probability setup had the signal bar been better, but you just have to let it go without you, unfortunately. And market pushed higher. And once again, first entry long, second entry long, horrible signal bar. You're going short directly into this triple bottom. Let this go without you. Now, once you see this, take a look how you're constantly pushing down. You're constantly pushing lower. This is where you can find the trend line like this. And this is just an idea, but you keep looking for these trend lines because the break and a new low keeps pushing lower, keeps pushing lower. So we're obviously trending lower. Take a look. You cannot just rely on this first initial downtrend. There's some bigger pattern that is unfolding. So this was the trend line that was easily found of these first big two swings. Now you don't have to have it. You just use it for bias confirmation. You still have an EMA pointing down. As long as price is below EMA, that's good. You have a new low, first entry short, second entry short, but this is the same bar as here, literally the same bar. I cannot go short here. I cannot go short here. But what I have is a new high form which confirmed two key entry points. One swing, second swing, so third swing confirmed the trend line. EMA holds price, and I have a first entry long, second entry long, failure. EMA hits holding. Take a look how EMA holds price every single time. Great high probability setup in a strong downtrend. Two trends down are working right now. This happened so quickly, I missed it. Unfortunately, like today, you're gonna hear me saying a lot of things like that. You're gonna miss it. So, but I didn't like really going short here because the bar is too big and the half of the bar almost is a bullish body. So it's better to wait. When the volatility is high like this, you know you're going to get a bunch of good setups eventually. This is just a half hour and after market open. From here to here is just 30 minutes of price action and you already got so many bars. So be patient. Market push lower. And now you're watching the same thing. First entry short, second entry short below EMA, but you don't get it. You have a push higher above EMA indicating bullish momentum. You have a break, new extreme. I don't like going long yet because this is still a bearish downtrend and I want to stick with the trend. Trend is your friend. Any pullback, two-legged pullback at key entry point is going to be high probability setup. So I just played safe. I just let this play out with the break, new extreme. And I want to see the same thing right here. Market gave you break, new extreme, and push below EMA. Give me a first, second entry long. Break, new extreme, and push below EMA and give me a first entry long, little pullback, it's a little bit hidden, second entry long, failure. Repeat pattern of this, repeat pattern of this. This is how I like focusing on these downtrends. I don't really think about buying. I just let these corrections play out and then I see if we get a failed second entry long below EMA. Okay, it can happen that we're going to reverse like that. That's okay. You will have plenty of chances to jump on board and catch some longs, but you don't just want to be going long too early, especially after the uptrend played out like this. So you have a first entry long, second entry long failure below EMA, big bearish bar, great high probability setup. Market push lower, first entry short, nothing, and you're reversing strongly higher. The trend line isn't holding here, and look at this strong rally. And take a look once again. First I drew my trend line like this, but since this move is not proportionate to this one, this is getting way too big. I need to redraw the trend line again. Okay, this is how you're going to do it. Now we have a break, new extreme, but take a look how strong this momentum fairly was. Now here's the thing. If we're going to have a break and a new low of this downtrend, price really cannot move too far. So I'm just sitting patiently here, not really sure what to do. And when I'm not sure what to do, when I have a break and a new low, new extreme, I just wait for price action. I wait for EMA to give me the information. That's all you do. A lot of traders think that you need to have a crystal ball to predict the future. No, you have a break, you have a new low, you have a new high. And how do I know whether it's time to sell or buy? I just observe the EMA. If price pushes below EMA, I'm playing the bigger downtrend. If price stays above EMA, I'm taking into consideration the possibility of larger uptrend being here. So there is a new high, first entry long, little break, and a new low of the downtrend. So this is great. If you're above the EMA and the downtrend already played out, that's a good sign that there's a bigger pattern uptrend unfolding. And there's a first entry long, pullback, second entry long, high probability setup. Two key entry points are holding, and then the setup I try to take, new low form right here. This is the lowest low. First entry short, second entry short, failure. You don't want to take second entry short because EMA holds price. The spike and channel holds price. You guys can see how nice the EMA holds. Failed second entry short. The bar is very bullish. There's a little bit of a bearish body, but the stim is very reversal bullish. Okay, so these are two nice high probability setups. Then you have a break and new low, but at the time you don't have this trend line, so you don't really can't go long here on a second entry long. This trend line was just found off this bounce right here. So after I see bounce like this, I'm expecting a second entry long somewhere right here. So don't forget to draw the short-term trend lines. You have a break, new extreme, and I want to see a higher low or failed second entry short right here above EMA, and you never get that. Market form a new high, and you know what that means? That means you expect correction or straight up reversal, and what you have, strong bearish momentum. So you're switching to shorts now. Maybe you're gonna get to finally the new low of this overall downtrend, and it's okay to zoom out every once in a while because you're watching this and you can see the entire downtrend. So it's always nice to zoom out to take into consideration what the price action is most likely doing. So there's a downtrend, so I'm expecting second entry short at the EMA, and I have a new low, first entry short, second entry short. Now this easily worked for multiple points, but the bar is just so big and the short-term trend line is still in play. I don't really like it. I don't like this trade just yet. Wait for a lower high. You have the short-term uptrend. You can get burned like this. Market push higher. So once again, I have to redraw the trend line. Same thing right here. You guys can see the similar pattern. The second swing kind of like happens a little bit later. Same thing right here. This is what I'm talking about. These two swings and these two swings, the same thing. This is very shortened, this is very shortened, and the second leg is so much larger. The second leg is so much larger. You have to redraw it right here, so you have the most recent price action. You're up to date. So there's a break, new extreme form, which means that upturn played out, and strong push below EMA. And this is how I like to play this downtrend. Like I said, I just like to be waiting for the failed second entry long. You have a new low, first entry short, second entry short, but this is textbook repeat pattern of this. You have the short-term uptrend in play, so you cannot take short it. It's a gigantic bar. Don't risk entry right here, but you have a new high because you have a two-legged pullback to key entry point. EMA holds price and trend line was established. Third swing confirmed this trend line and EMA held, and you have a first entry long pullback, second entry long failure. Great high probability setup right here. Market push lower, gave you a break, new extreme. So you don't want to take this first entry short, second entry short entry. And look, I'm drawing it wider like this and not tight like this. Why? Why do you think, why am I doing this? Because after I have a break and a new extreme, I want to expect a little bit of a correction, because this is how you can get a lot of times trapped. If you draw it too tight after break and a new extreme, and especially on a larger pattern, this looks like two legs down a little bit. I want to be a little bit careful, so I drew it like this. It's still probably worked because this is the volatility is so insane. What is this? 42.7450. So this is 1 point, 2 points, 3 points. So this was 3 points worth of scalp. So it worked even for 3 points. But you don't want to take it just because it's second entry. You don't want to take it. By then, you're just way too stacked. EMA is getting flat. You're starting to be in a range, so you're switching to range rules. You will push higher. One top, double top, triple top, failed breakout, high probability setup, quite a room to EMA. Most breakouts of trading ranges will fail. And you push lower, you're back at the support. So when I'm back at the support, I want to see, I'm playing the rules. I'm expecting for price to go here, up to here, and I have a first entry short pullback, second entry short, EMA holds, trend line holds, failed second entry short failure, failed second entry short, high probability setup. I wanted to take this trade with the limit order. This was instantly. This happened like in 1 or 2 seconds. It's very hard to catch this trade, but I really like this trade. You don't have this trend line yet, by the way, at the time, okay? Where would you would be start looking for this trend line is exactly after this. Because since you're coming from the low of the trading range and you have failed second entry short, you're expecting for price to reverse a little bit here, but you push back into the trading range. And this is a little bit odd. And even as you guys can see, price keeps pushing off this resistance. So the resistance is holding, you trade it down into range, so you're most likely going to break it down. And this is where I used these swings right here, so I get a nice confirmation of here. And when I was watching this live, I saw this beautiful new high, first entry long, second entry long right here, but EMA is completely flat in the middle of those bars. Yes, the context is really good here. You're going to push lower. It's really telling you you're going to push lower. You want to short, but you cannot short bar like this that is, you know, 9-10 points, almost 8 points in this mess. So unfortunately you have to let it go without you. Then you have a second entry short far away from EMA, you don't want to take it. And then you have a new low, first entry short, second entry short, extremely far away from EMA, but you have a gorgeous double trap. I took this trade, break any new high, EMA holds price, market push lower, a great entry. You have a little bit of overshoot, so you know what do you expect after overshoot. You expect a break of a trend line or straight up reversal. And once again, you have to redraw the trend line because this move right here is not proportionate to this. So you're pushing higher. Now you have a break, new extreme form, another leg down, another new extreme form. And there was actually a first entry long pullback. You triggered lower, second entry long failure. But I don't like going short just yet because you're still above exponential moving average. But once you push below EMA and gave you a lower high setup and key entry points are holding, I like this. And I kind of like this treated as a failed second entry long because even though this ticked first lower and then reverse, so technically failed second entry long is here. You can treat this kind of like a one move pullback and a second move, two key entry points are holding. And once again, you're doing the same thing. Just because you see uptrend in a strong downtrend doesn't mean you're going to just buy yet. You have a break, you have a new extreme, you can push higher. It can happen, okay? But once I see push below EMA, this is where I'm looking to sell. No high probability setups, a bunch of first entries, not interested. No setups right here. Just we're starting to stack up here. There's a new high, first entry long, second entry long, but you close below EMA here. And that's not really, I mean, you close above EMA, but you first push below. So that's not really a good sign here. So I actually wanted to go long, new low, first entry short, second entry short failure. If you got triggered above this bar right here, EMA held price, but you never got the trigger. And this is just the overall consolidation area. You just have to be patient, don't force trades. And market push higher, you have a break, you have a new high, and this is almost textbook repeat pattern of this setup right here. I even had my trend line. This is how I had my trend line at the time. This is what I had. And you guys can see it looks almost identical. This setup right here. Now, unfortunately, first entry long, second entry long, this just set up the trend line. Big stim, I don't really like it yet. New high, first entry long, second entry long, short-term downtrend is in play. So you finally have a break, new extreme form. So that tells you that the downtrend played out. And you have a first entry short, pullback, second entry short failure. This is a reversal pattern and market pushed higher. And now, once again, just like here, you have a break and you have a very small move to a new extreme and instant reversal, which tells you there is no bigger uptrend. Here, you have a break and you have a very big leg up and you're quite far away from here. So this is what tells you that you can actually draw the trend line a little bit wider. This is a little bit more advanced because I didn't do it at the time, but looking back, I definitely should have, and I see why what I missed, because you guys can see how nicely it fits here, three touches, and you went so far up. This has been such a strong uptrend. You're definitely not looking to sell here and wait for a new low of this downtrend because you already moved way too far up. But once you get this nice two-legged pullback, new high, first entry long, second entry long, EMA holding price, gorgeous entry. Then you have a downtrend working lower. I was actually expecting for price to break above this bar. Never happened. So you're respecting the correction. First entry short, second entry short. If second entry shorts form below EMA, I actually like this short. But I cannot go short if it's formed above. And then push higher. No really clean second entries. You guys can see that the trend line is being a little bit wider. But I don't see any good two-legged pullback that I would like. Market is pushing here, still no clean two-legged pullback. New high, first entry long, second entry long below EMA. I don't think it is long enough to consider this EMA gap bar because you close here. You have a new low, first entry short right here, pullback, second entry short, big bullish bar that closed above EMA. Your stop loss goes below this bar. This is a double bar entry. Your stop loss go below this bearish bar. You need to use the price action structure to help you protect the stop. You pushed higher. So this is a great high probability setup. And then you got the strong reversal. Once again, let me see. This was a little bit... you have a strong uptrend. And you have a strong downtrend. So this may be the area where you just want to sit patiently a little bit. I don't like any setup here. But once you get the new low right here, and you get a first entry short, a second entry short with such a big bearish bar. And this downtrend looks fairly strong now. I kind of like this trade. Market push lower. You have to draw the shortened trend lines. Like here, break, new extreme, you have a new high, first entry long, pull back, second entry long right here. But you closed above EMA. Too bad you didn't close below. You know what? This could have been great because you still expect to have a break and a new low of this downtrend. First entry long, second entry long, failure. But at the same time, you have a massive uptrend that is working higher. So you don't know how EMA, if EMA is holding price, that is telling you something. So I don't want to mark it in hindsight because, you know, I wasn't sure at the time. And market gave you a 2 legs down to a new extreme. First leg, pull back, a second leg. And I actually drew my trend line. Hold on. I drew my trend line something like this when I was watching it at the time. And there was a nice double trap, but you already made a new low. But after this push down, I kind of extended the trend line, but that wasn't right because this is the bigger uptrend that was throughout this entire move. And this shortened correction already had a break and 2 legs down. So I was supposed to focus more on the bigger uptrend rather than this smaller downtrend. But this is, you know, how it's starting to get a little bit harder to trade when you have so much price action on the chart. And wow, there's so much price action. I marked a last 2-legged pullback, which confirmed it's nicely off 2 key entry points. But wow, there's so many setups pushing even throughout the day. The volatility is extremely crazy. Look at this. Wow, insane. So you have to be definitely careful. You have to scale down the number of contracts. You have to stay on the micros. You have to stay on the simulator. Don't just quit. You want to sim trade this just to get the experience. You want to learn to recognize the price action as it's unfolding during the market like this. But you definitely need to be comfortable with what you're trading because the stops are so big. So make sure to scale down. All right. So I'm going to wrap it up. I'm going to see you guys in the next one. Take care, everybody.